Frontline News, I'm Javon Keys. It's now time for Frontline Business. The Irish Times newspaper says Digicel has revealed that more than 75% of creditors holding almost $5.1 billion of the group's debt pile have so far agreed to write off a significant amount of what they are owed. Now, Digicel, which has been left with a $7 billion debt pile amid declining earnings in recent years, launched an offer late last month to 5 categories of bondholders to exchange their securities for bonds of lower value. The restructuring plan is aimed at wiping $1.7 billion of debt in a process that has been judged by debt ratings firm Fitch to amount to a distressed debt exchange. Now, on Wednesday, Digicel said between 86.9% and 97.1% of 4 classes of debt holders targeted have signed up to the debt exchange offer. According to the Irish Times, this would allow the company to impose the deal more widely on holdout bondholders in these categories if it chooses to use a legal mechanism open to it under Bermudan law. After passing the 75% acceptance threshold, the debt exchange offer is due to expire on April 28. Several business leaders have endorsed the government's decision to seek access to the International Monetary Fund (IMF's) rapid financing instrument as part of measures to cushion Jamaica against the economic fallout caused by the COVID-19 pandemic. Jamaica Employers Federation President David Wan says while the Bank of Jamaica has substantial net international reserves, revenue inflows may fall short of projections due to the slowdown in the economic activity. President of the Jamaica Chamber of Commerce, Lloyd Distant, says the government made a good move by joining the line early. He urged the government to apply in a similar way for access to the World Bank's rapid financing instrument. The government has also received several or rather similar endorsement from the Small Business Association of Jamaica and the Jamaica Manufacturers and Exporters Association of Jamaica, JMEA. And the International Monetary Fund, the World Bank, and the Inter-American Bank are forecasting tough times ahead of the Caribbean and Latin America this year. The IMF says the region is likely to see a 5.2% decline in growth, while the World Bank says gross domestic product is expected to be minus 4.6%. Those forecasts, to see the worst are Grenada and St. Lucia, which could record negative 7.3 and negative 7.2% growth respectively. The IDB predicts the economic damage will carry into 2021 and 2022 unless governments implement well-focused programs to offset the impact. We now head to stocks. In Monday's trading session, the JSE Combined Index declined by 1,543 points to close at just under 400,000 units. Overall market activity resulted from trading in 81 stocks, of which 29 advanced, 41 declined, and 11 traded firm. The Junior Market Index advanced by 27 points to close at over 2,000 units. Stocks advanced for 138 Student Living Jamaica Variable Preference Shares, Access Financial Services, Caribbean Assurance Brokers Limited, Epley Caribbean Property Funds Limited SCC, and Epley Limited. Stocks declined for 138 Student Living Jamaica, Barita Investments, Berger Paints Jamaica, CAC 2000, and Caribbean Cement Company. Trading firm were 1834 Investments, Cargo Handlers Limited, Caribbean Cream, Simony Group, and Derrimont Trading Limited 2021 preference shares. QWI Investments Limited was the volume leader with 25.4 million units, followed by Wigton Wind Farm Limited ordinary shares with 2.4 million units, and Trans Jamaican Highway Limited with 1.5 million units. And now the foreign exchange. U.S. crude prices plunged to their lowest level in history as traders continue to fret over a slump in demand due to the COVID-19 pandemic. Now, Brent crude fell $1.63 or 6.2% to $26.35 a barrel. West Texas Intermediate $16.76 or 92% to settle at $1.38 per barrel. And that's it for Frontline Business. I'm Javon Keys. Pleasant viewing.